This is Rajiv again to your service as chief host for today's program on USA taxes and rules. I'm honored to get this opportunity once again to bring this workshop or webinar to the community's benefit, and this time to help everyone with filing their federal taxes for 2021. And if you have any questions like how to maximize your return, how to handle property, capital gains, my dear friends, believe me, you are at the right place because we have our guest and keynote speaker, Mr. Manjit Singh, to address all such queries to your satisfaction by his immense expertise in this area for the last 25 years. The talk would last for approximately 40 minutes, which would be followed by question and answer session. While audience would be muted during the talk, please feel free to drop in your query using the Zoom chat feature. All these queries will be collected by Dr. Yogendra Gupta and presented to Mr. Singh once the talk is over. Additionally, if the time permits, we will open the forum for live question and answer on voice as well, but that depends on time. We'll take a call once the event is over. To set up the event, I would request Dr. Banik to welcome the guests quickly, and we'll start. Dr. Banik, please.
I think Dr. Banik is on mute.
Dada, unmute yourself.
Hello? Oh. Good. Hello?
We can,
Yes,
please.
we can hear you.
Okay. As the national chairman of NCAIA, it is my great pleasure to welcome all of you to this very important seminar on new tax laws, run by one of our most celebrated taxmen in this nation's capital, our dear friend Manjit Singh ji. I want to thank our coordinators, Shashi Agarwal, co-coordinator Rajiv Kamal ji, our Vice President Yogendra Gupta, and Kripa Shankar ji, and the rest of the people for bringing the most up-to-date information on tax laws. It's only 1 month away in April to submit your tax. So it is best time, opportunity for you to ask your question, send it to Dr. Yogendra Gupta. With that, thank you for participating. NCAIA organized one of the most important topics in our life, tax.
Thank you, Dr.
Thank you.
Thank you. I'll quickly check since our chairman is yet to join. We'll move ahead with the flow of event, and I will request our coordinator, Shashi ji, to introduce the keynote speaker, Mr. Singh.
Namaskar, everyone. I'm Shashi Agarwal, the Executive Vice President of NCAIA. I'm going to give you a brief intro of today's guest, Mr. Manjit Singh. Manjit Singh CPA PC firm has been providing accounting, bookkeeping, payroll, and income tax return preparation service for almost 30 years in DMV area. He is well recognized at the Internal Revenue Office at the Tyson's Corner, Virginia, and has successfully represented clients in tax audit cases, tax controversies. Has accompanied a client to US tax court and was successful in saving over $125,000 in taxes. Most recently, he was successful in getting levies released within 48 hours. He has been recognized by the businesses in the DMV as one of the top 50 smart CPAs and a center of influence. He's a trusted advisor to individuals and businesses. He takes personal interest in all his clients individually. He reviews and signs off each returns in his office. He has been instrumental in providing guidance to several of his employees in achieving their goal of becoming CPAs. There are several CPAs who have emulated his example and are following in his footsteps. Manjit Singh CPA has always been on the forefront of sharing his vast knowledge with the community on all tax law changes, alerts on what are the hot topics at the Internal Revenue Service, such as Embassy Initiative, Offshore Voluntary Disclosure Program, OVDP, and the associated FBAR and FATCA. You may have read his article on social media regarding the state of affairs at the Internal Revenue Service, such as millions of returns unprocessed and mail not opened and taxpayers' refund not processed from 2020 returns. He has been on various local TV programs such as Sagarmatha, Darshan, Chitramala, Gingerbread Production, Colors of India, Global Television Network. Manjit Singh earned his CPA license in 1987. Hold an MBA from George Washington University, GWU, and a BBA from the University of District of Columbia. His experience consists of work in retail industry, professional services, travel agencies as controller before starting his own practice in 1991. Now I invite Mr. Manjit Singh CPA to come and give his presentation. Manjit ji.
Thank you, Shashi ji. I hope everybody can hear me.
Yes, we can.
Thank you very much. I tried the system earlier and it worked. So let's see where we go. Thank you very much. Very kind of you to invite me or allow me to come back here and make the presentation. I just need half a minute to try to bring the slides so that we can share the screen. Aja. Yeah. Hold control to multiple windows. Okay. I hope everybody can see the slide.
Yes.
Thank you very much for the response. Ladies and gentlemen, as we all know, the United States tax laws, they change as the administration change. And luckily this year, there hasn't been major changes as President Trump had taken the tax law book and spun it on its head. So there's not very major, but there's some very key important things that needs to be looked at. The tax brackets have spread out. They became wider due to the inflations. As we recall, the standard deductions were increased by the President Trump, and thereafter, personal exemptions were eliminated. As we all know, the tax law is progressive. In this slide, I believe I gave a slide deck to Rajiv, and I'm not sure if he'll be able to share it with all you guys, and you can download it. Please feel free to review it. And after the session, ask questions. If you want to ask questions later on, that is also welcome. Very many a times, the question is raised, why is my tax higher this year than it was the last year? Did something happen that I'm paying a higher tax rate? Like I said, the tax is progressive. We are not paying taxes in the sense that if my income becomes, let's say, for a couple married filing joint, it falls in 85,000 range. Everybody can see the cursor?
Yes.
Thank you. And that means this person's return is in a 22% bracket. it does not mean that he's paying 22% from the zero bracket, zero amount to 85,000. On the 19,900, he is paying 10%. So that's 1,990. Thereafter, you keep adding it. It's only the bracket, only the amount greater than 81,051 that he's paying the 22% bracket. Everything else is at lower rate, like for example, 10%, then 12%, and then to that amount, the additional amount is added. I skipped one point here, and I don't have a slide on it, so I'm going to give it verbally. What is the amount that we pay tax on? It's called taxable income. And taxable income is derived after certain subtractions, such as deductions, from adjusted gross income. So what is adjusted gross income? I'm going from bottom upwards, or shall I go from top? We calculate the adjusted gross income, and the adjusted gross income consists of all the items of income that you have: W-2 wages, the dividends, interest, profit or loss from self-employment business, or rental real estate losses, which has sometimes limitations. You may get some deductions, you may not get some deductions, unemployment revenues, and sometimes some people will give you small amounts. Technically, it's taxable income. Gifts are not taxable to the recipient, nor is it a deduction to the giver. So all those items minus certain items, like for example, self-employed person has to pay the equivalent of Social Security and Medicare tax that W-2 people pay off their W-2. They call it self-employment tax. 50% off is a deduction. Then you also have, for self-employed individual who run their own business, even if it is a one-member LLC, they get a deduction for self-employed health insurance premium deduction. If they are carrying a retirement account, you are allowed to take the contribution into the retirement account. If your employer is not offering you a retirement account, you have a deduction for IRA and a deduction for non-working spouse deduction for IRA. You can contribute on her behalf also. These items added together gets you to the number called the adjusted gross income. Thereafter, you have deductions such as qualified business income, thanks to our former President Trump, 20% of the net profit of an S corporation, K1, where you are an active partner, or a major active partner means you are the one who's doing all the activities, not just an investor and sitting back and enjoying the profits to yourself. That's a passive. So after those deductions comes the major deduction. And that is either you itemize your deduction, where you claim mortgage interest, real estate taxes, other taxes from your W-2. Unfortunately, this is all limited to a $10,000 ceiling. Your charity, which is very important. And then you compare itemized deduction for a person who's married filing joint, and for single. For the year 2021, for single, the standard deduction is $12,550. For persons filing separate, they decide you're allowed to do married filing separate. You may not want to do married joint return because sometimes there are some minor benefits. For people who are head of household, In other words, somebody who's not living with their spouse at least 6 months of the year, and they're providing shelter, roofing, housing, boarding to a dependent, be it a child, be it a family elder. You can qualify for head of household status. The standard deduction for that individual is $18,800. For married filing joint, it's $25,100. It's $150 to $200 higher than it was for last year, which is 2020, which was $24,800. Surviving spouse for after you are separated from your spouse due to natural causes, God's will, you are allowed to do married filing as a spouse. Surviving spouse, it's the same tax rates for somebody who is doing married filing joint for a period of 2 years. God forbid, if you are blind, you get an extra deduction of $1,350. And if she is the unmarried, they get $1,700. I would not like to talk about the 1150. That's a very tricky matter. Then we go to the new tax law that came into effect. Shall we call it as a tax law, or was it an incentive? It was technically an incentive. President Trump gave 2 stimulus payments. One was given out in April when the pandemic was declared, and the second one was late December 2020. People started receiving checks in the year 2021, and it was dependent whether you filed the tax return for the year 20 or you did not file the year 20. A lot of people are under the assumption that it was taxable income. No, it was not taxable income. It was incentive. For those people who had not received the payment, we were allowed to claim it and say, hey guys, I did not get my economic impact payment. Please give it to me. There were a lot of people who intentionally or unintentionally indicated to the preparer, or when they prepared the return themselves using of the internet services, they did not remember how to report it or not to report it. Because of the discrepancy, especially claiming it the second time around, is where the IRS kind of held off the tax returns. They declared it an math error. No, ladies and gentlemen, the accountant or the preparer, the CPA, the enrolled agent, or an attorney, they did not do a math error. It's the computer which indicated to the system per se, hey, wait a minute, there is a discrepancy here. They got the payment, they are asking for it again. Somebody who had a birth in the family for a child, there was a stimulus payment for them. But the IRS computer did not have it based on the prior year return, 2019. They did not know about it since that individual was not on their tax return for 2019 because the child is born in 2020. That slowdown, that checking verification mess up the processing, and therefore tax returns started falling behind in getting processed. People were working from home, not available to answer the phone calls. Bingo, we are suffering till today. The last report by the taxpayer advocate, Ms. Collins, indicated substantial number of returns still unprocessed. During the pandemic shutdown, the mail was not opened and used by the IRS because the employees were working from home. The pile after pile started piling up. This year, I would say just about 30 days ago, Commissioner Rettig reallocated 1,200 employees, experienced employees, to come and take care of this unopened mail. Last week, 10 days ago, he announced there shall be no computer-generated notices sent out so that they can at least resolve the pending issues before they send another notice saying, you didn't pay us yet. That was frustrating because if you get a letter, you know you have paid your taxes in full. You made the payment by going online, but the reconciliation did not take place. You're going to get upset. You're going to call the IRS. IRS is not able to answer the phone. More of a frustration. So hopefully in the next 30 days to 60 days, we shall have a resolution here. So talking about the stimulus payment that Biden issued, there were letters issued along with it. And it came to the husband, it came to the wife. Both of them got letters saying, we gave you $1,400. We gave you $2,800. If you had a dependent, we gave you the stimulus payment. Even today, we are getting individuals saying, I don't think I got the stimulus payment. I make them sit in my office, log into their bank account, and they say, oh, I did get $5,600. So we as a preparers, when you prepare your own return, you need to make sure that you did not get the payment either by check or direct deposit in your account. For an individual who was single and their adjusted gross income was $75,000 or less, they were eligible to get $1,400. If they hit the target of $80,000 of adjusted gross income, that means an income increase from $75,000 to $80,000, the $5,000 gap, the $1,400 stimulus payment disappears. Similarly, for married filing joint, from $150,000 to $10,000, increase of income of $10,000 to $160,000, stimulus payment was not eligible. These stimulus payment issue is going to be a critical. But now that the IRS has an authority to declare something as a math error, in the past, 12 months ago, they didn't. 24 months ago, they did not have the authority from the Congress to say there's a math error in the return. They used to say there's a discrepancy or we need explanation. The next thing is we get questions very many a times. What's my capital gains? Again, here, we need to understand what's a capital gain. Something that you buy and you sell, especially if it's tangible personal property, residential, is considered capital gain. There are two things. One is a short term, the other one is a long term. Short term is anything which is less than 366 or 365 days, because one day is a leap year. Anything that you have held in your hand for less than 365 days, it's short term. Short term tax rate is same as your income tax rate. There's no special benefit. It's only if you have held the asset greater than 365 days, even if it's 366 days, 368 days, it falls in the category of long-term gains. For an individual who is single, the capital gains rate is 15%. If he falls, his income falls between 40,000 to 445,850. He shall pay 15% tax on the net capital gains. For an individual who's married, has, let's say, non-taxable income from Social Security benefits, no additional income that becomes subject to income tax, $80,800 worth of profit from long-term assets shall have 0% tax rate. That is a substantial benefit. Biden's rule, I hope he doesn't apply it. He says, and he's of the opinion that the 20% rate should go up to 28%. I keep my fingers crossed. Somebody put sense into him not to do it. The next item that we would like to talk about is the charitable contribution deduction. For the year 2020 was the first time that actually it was second time that they indicated, if you are not eligible to itemize, we shall still allow you a charitable contribution deduction. For an individual, it was $250 for the year 2020, which I didn't write here. For the year 2021 is $300 per person, $600 for a married couple, even if you are not itemizing. There's a slight change in this area that we shall try to cover it up. Actually, maybe not. I should cover it up here. When I describe what an adjusted gross income is, the charitable contribution deduction for the year 2020 was prior to the adjusted gross income. In 2021, they moved it from an adjustment to the adjusted gross income to taxable income. So it's $600 only, not a big deal. But unfortunately, they moved the chart lines. So when we are doing the return comparison between the two, in 2020, it was above the line. Anything above adjusted gross income used to be known as above the line, and anything after itemized deduction is considered as below the line. How much can I write off in donations? In the past, 4 years ago, 5 years ago, you could give away $100,000 as charity, cash. We used to compare it with how much your total income was, because at that time it was a deduction as itemized deduction. You could not claim anything greater than 50% of your adjusted gross income. Let's say the adjusted gross income was 60,000, you donated 100,000, you cannot take 100%, you can take only up to, I forgot the numbers, please forgive me, chain of thoughts. I'm getting old also, that means.
30,000.
The $40,000 shall be carried forward to the next year. You'll get the benefit to claim it in the next year. All right. If the donations are in cash only, you can also give away, what do we say? Assets such as stocks in a private company, or IBM stock that you got about 30 years ago has gone substantially up in value. You could give it away, and therefore they were limited to 20% of the market value for the deduction, or 30%. But in this continuing forward, we have better benefits. There is a slight restriction. People who have, we have noticed, people who have sold their own companies into millions. What they do is they go ahead and set up a private foundation. It's not publicly supported. Family members, friends and family are contributing into that charity. That one is called private foundation. A publicly supported charity would be somewhere like the association here, the Rajdhani Mandir, or the Gurdwara, or the church. Any other organization that is fully supported by the public at large, not a group of people. So any contribution given away to private foundations, the 100% gifts in cash are not kosherly deductible. The next limits are in the retirement accounts. In 2022, we are allowed to contribute as an employee. When the employer gives us our salary, if they have a plan at place, we are allowed to contribute $19,500 from our salary to the 401k plan or 403 plan. They are almost the same, but different code sections. If you are less than 50, it's 19,500. If you are 50 and above, you're allowed to do another contribution of 6,500 for a total 25 and 26,000 for the year 2021. Not meaningful to talk, but keep an eye on your tax return when you prepare it or the CPA prepares it, just for your knowledge. This is an opportunity where you can target for the year 2022. You are allowed to do 26,500 for 2022. $1,000 difference. So keep an eye. The 19,000 is $1,000 difference. The addition, the two together, is going to be additional 1,000. Total contribution for less than 50 was 58,000. For 2022 is going to be allowed at 61,000. And for people who are over 50, my tax presenter gurus that I go to listen to, they call it us, the old geezers. For the current year, somebody who doesn't have 401k plans at work and they want to put money into 401 SEP IRA is for people who have their businesses. For individuals that have no retirement accounts or anything, it's called the traditional IRA at the bank individual retirement account. The contribution has not changed, 6,000 in the past, 6,000 now. Catch up is an additional 1,000, no changes. SEP IRA follows the same rules as the 401k. Self IRA stands for self-employment pension plan, but because it's in the nature of an IRA contribution, therefore they added the word SEP IRA. Simple is something similar to the retirement account, except that there is no restriction that, hey, you are top heavy. In other words, the owners of the company are contributing a lot more money, and the people who are below them are not able to afford to contribute, and therefore there comes a restriction. It's called ADP testing. Therefore, they do the plan called Simple. That increased by only $500. In that, if you notice, for the year 2022, the owner will not be able to contribute more than $14,000, whereas in a 401k, he's able to contribute a max of $61,000 for the year 2022. If he's under the 50, and if he's greater than 50, like us old geezers, it's going to be $67,500. Please do talk to your CPA, firm CPA, your individual CPA, how you can go over and above the threshold by making contribution through the company for the employees who are causing you to be constrained. There are ways and means that you can do it. I hope that was good. So comes the next thing that I talked about, gift tax exclusion. What is a gift? lot of people come confused. I will give a gift to my son. How much will it be deductible? When you give a gift, it's not deductible. The change has been in 2021 to 2022, they allow you to give an extra $1,000. Mother can give gift to her son or daughter or to both for the year 2022. No reason to talk about 21, it's past. 16,000 each. So she, out of her wealth, gave away 32,000, assuming there are only 2 children. Dad can do the same thing, give away 32,000. What's the effect? The wealth that you have accumulated is what you are giving away. No benefit to either of the 2 people. The implication comes into the next line item called the estate tax exclusion. It's 11.7 million in 2021, but it's 12.06 million in 2022. The meaning of that is if you were to take all your assets, sell them off, pay off your liabilities, whatever is left, if it's greater than 12.06 million, theoretically, that's subject to estate tax, wealth tax, if some people may use that. It's at 35% bracket. So therefore, over the period of your life, if you know you're accumulating wealth at a higher speed, this is where you start taking advantage of giving away the gifts. It doesn't hurt if you give away $5 million as a gift to your child. On the surface, it says the giver will be subject to taxes. The recipient does not pay any income taxes. This is where you come in and use the special exclusion provision saying, hey, Mr. IRS, here's my form. I gave away $5 million to my child. Therefore, reduce my lifetime exclusion of 12.06 by 5 million. And let's continue forward with 7.06 million for the future. You evaded that gift tax, estate tax. There is ways to do it. And if you plan your estate properly, it can be done. And we have helped people do it. The next line items are small ones. People who are teachers. I think this is ridiculous from the government point of view. They spend money in classrooms. So it's an above the line deduction, $300 only for the year 2022. For example, teacher buys some supplies. This should go up. If I ever meet Biden, I'll tell him. Health savings accounts, people, employers where you have high deductible health insurance, $36.50 is the amount that you can contribute. It's pre-tax. For a family plan, it's $7,300, double. I have seen people contributing it into this health savings account and treat it as an IRA where you are not allowed to contribute money into your IRA account. It's accumulating money in there. For the year 2022, people who are making more than $157,000, if you remember, Social Security tax is taken out of your wages at the rate of 6.2%. The 1.45% is Medicare tax. There's no, what do we say? Limit. You make 10 million, you're going to be paying that Medicare tax. Medicare premium base has gone up by to $170.10. If your children has savings account, the children under the age of 14, they have interest income of $2,300 on which there's no income tax, but you're going to have to pay more income tax. If at the parent's tax rate, if they have interest greater than $2,300 in 2022. So if there are some people who are contributing money into their children's savings account, this is the time to review what was the interest earned on those accounts in 2021, make the adjustments, maybe not contribute, maybe remove the money. And you still want to put money, there are other ways to put it. For example, into 529 plans, something similar to that. We talked about the IRA contribution, no change, $6,000. One more thing, foreign earned income exclusion. You are working for a company in the US and they send you to work in India. And you remain out of the country for greater than 329 days. You can exclude $112,000 from your income taxes. You are allowed that 30-day period to be in the country in the US. This is a great savings strategy for a lot of people. It does not necessarily mean that it has to be within the same taxable year. You can spread it. You can start it out, review how many days you were away in 2021, in 2022. The only thing is, if you have to file the return, take an extension to October 15th so that you have met the condition of the 330 days out of the country. We have done that for several people. Now, what is the thing that we have lost between 2021 and 2022 and don't expect it? Tuition and fees deduction. You had children going to college. We were looking at how much money did you spend for the child and college, the HOPE credit, American AOTC credit, which is $2,500. But if your income was higher than $180,000, you were not getting it. So here now, at that point in time, we were looking at what if there was only tuition paid and we just take as a deduction instead of a tax credit. That part for 2021 is gone. No scope. And this was kind of a stealth thing that came in. Unemployment insurance payments from the state, even though Biden extended it to September 6, 2021, unfortunately, the whole amount that you received as unemployment, your children got it, or you got it, or your spouse got it, there is no $10,200 exclusion, even though they got more money. Instead of the earlier $600, it became $300 from May, I believe, to September 6th. We can thank the senator in West Virginia for the increase in the period. Then there's the family care, sick leave, and pay to the employees. It was optional for the Q1 through Q3. Participation by the employer was voluntary, available to self-employed individual also for the Q1, 2, 3. This is still applicable for people who are have their own businesses, have employees. It is a little complicated to do the mathematics. You gave it to one employee, but you didn't give it to another employee. So we have to be careful on that. Now, this is a very, very hot topic with the IRS. What is cryptocurrency? Cryptocurrency is, some people have defined it as an asset. not an intangible. How is it supposed to be reported on the return? Just like a sale of the stock. And another thing, if the mining of that crypto or the accounting of that crypto is maintained overseas, you have a little FBAR, foreign bank account report activity issue as well. For the last 2 years to 3 years, they have been using a question in page 2 or page 3 of the tax return in the form 2021. Please note where we have marked the red arrow. They have brought it forward right below your address box. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Ladies and gentlemen, did you buy anything in cryptocurrency? Did you get paid in Bitcoins? You're supposed to check the box. At this point in time, it's only this. They're not asking any further details. Another element that has come out in the last 30 days, I think I may have it here. Here it is. Voluntary disclosure practice pre-clearance request and application. I don't know how many people remember that if you had a foreign bank account in the past, going back to the year 2009, voluntary offshore voluntary disclosure program where you are not reporting that you have a foreign bank account, not filling out the FinCEN 114 form, even though at that time it was called something as TD 98 point some. All right. They used to tell you, okay, here's the paperwork, fill it in, pay us the 20% penalty. Then they went in 2011, they closed it. They went back to open it again in late September 2011, closed it in 2012, and increased the penalties. So ultimately, in 2014, they shut it down totally. And they said, okay, guys, now you come forward and you tell us if you file the FinCEN form, FBAR form, that's another word for one of the type of FBAR form. If you file it good, just pay the interest that you did not pay, sorry, the tax that you did not pay on the interest, the tax that you did not pay on rental property income, or the sale of the stocks and bonds. So the very first program that they came out in 2009 and 11, you had to fill in the form 14457, seek IRS permission to participate in the forgiveness program. They have gone back and modified it to include cryptocurrency as of the last 30 days. So some of you people who think that you have a little issue here, they're allowing you to participate in the voluntary disclosure pre-clearance request. Employees of the international organization, World Bank, IMF, OAG, or whatever it's called, please be aware that your pension plans, payments are subject. If you choose to apply for the green card, you will become liable to file the FBAR reports because now you're a resident and not a non-immigrant, non-resident immigrant. Okay, guys. Any questions? I see some people are sleeping. No? Did I keep your attention?
I have some question in the chat box. Manjit ji.
मैं सुन रहा हूँ जी.
Okay.
Manjit ji, you are on very right track. You keep going, and then at the end, I will suggest that we can go with the question.
Sir, that's all. I have a presentation ready for today.
That's good then.
I started trying to elaborate on it, and then I said, oh my God, I'm running out of time.
Thank you.
Okay. Who's going to ask
Joginder bhai.
question?
Joginder
Okay,
bhai.
because he is done. He said thank you. His presentation is over. I
Okay,
have
to
some
ask question.
questions.
पूछे जी पूछे, मेरे को चैलेंज करें.
डॉक्टर गुप्ता पूछिए नहीं तो मैं पूछूं.
मैं पूछ रहा हूँ.
Hmm.
How can you minimize capital gain tax on the sale of your rental property after availing depreciation for multiple years?
Sir ji, we have talked about this subject in the past very many a times. You take that property, it is a rental property.
Yes.
It depends on how many years you have taken depreciation. You have to be very careful here now. If your income was greater than $150,000, you have passive income or passive losses, they were suspended. So now if you sell it, you're gonna pay tax on, what do we call? Gains. The gains will be computed based on your cost price of the property plus any major capital improvement to the property that increases the basis of the property. You claim depreciation. So the book value comes down of the property. At the time of the sale, you have recognized gain. But you also had suspended losses because your income was getting higher than 150,000. So now you'll be allowed to offset those suspended losses. At that point in time, you have to figure out, therefore, before you make that decision to sell the property, you need to sit down with your accountant, you need to sit down and pull up your depreciation schedule and figure out what's going on. The best way is to do a 1031 exchange.
Yeah.
You have this property, you identify another property within a 90-day period. You have to use an intermediary. You cannot get hold of the money from the transaction. You have to use the intermediary who's going to get the money in his hands, and then you close in the next 90 days on a separate property. The intermediary is able to manipulate, put the paperwork in place in such a way you get the possession first, and then you do the sale later. But it has to be in the specific defined period, 180 days from the start to the end.
Okay.
One more second, please, if I may.
Okay.
You can sell one property and buy two. You can sell one property and buy three. As soon as you get some money cash in your hand, they call it boot. That boot is subject to income taxes.
Good.
Okay.
Does that answer the question for gentlemen? How can we minimize capital gains?
Yeah. Manjit bhai, I have a question, same related topic. We have sold a business and we have capital gain of 1.7 million. What should we do?
Is this Mr. Singh, Sunny Singh?
Sunil Singh, yes.
Sunil Singh, sorry, sir. Sunil bhai sir, ये क्वेश्चन पूछना इस वक्त लेट है अगर आप बेच चुके हैं तो. This is a strategy session that you should have before you do the transaction. At this point in time, this is not something that you goes under the code section of 1031, because one business into another business doesn't work that way. Another strategy that I would have done, I would have sold the whole company versus selling just the assets.
Okay.
How do you own the company? Piece of paper called shares.
Yeah.
आपकी क्या कॉस्ट है उस शेयर्स की? 50,000 theoretically.
Yeah.
आपने उसको जितने का भी बेचा to get the profit that you have.
Manjit, I got one question.
It will
No, I
be
have
capital
with
gains.
chat
Capital
box,
gains
Rajiv
because
ji.
you had the stock more than 365 days.
हमको करने हैं. In chat box question, let me finish those, then you can go ahead. Whosoever has personal question. Here's the question for you, Manjit ji. Who are the eligible person to get economic impact payment? Because somebody wrote, I have not received payment since the pandemic started. And I was a student from January 2019 to 2020.
Anybody, stimulus payment eligibility is for anybody who has a social security number. If somebody is on a student visa, which means ITIN, no. Single person who has income less than $75,000 and is not somebody's dependent. अगर मेरा बच्चा है कॉलेज में पढ़ता है, he's my dependent, I put him on my tax return, he will not get it because he's my dependent.
Okay.
And
So I have another question.
And now if daddy's income was higher than, married filing jointly, higher than 160,000, 300,000, 400,000, daddy didn't get it. The kid in the year 2021 does his taxes, he can claim it.
Okay.
It's a तराजू, खेलना पड़ेगा तराजू के साथ.
All right. I have another question in chat box. That someone tax say $1,500, 15,000, and files the extension, and then pay this amount later by October. How this works? What are the consequences?
All right, two items that are very critical here. You owe money and you do not have the ability to pay. You don't pay, but you file the extension. The definition of extension is it's permission or it's privilege given to you to file the taxes in October, but it's not an extension to make the payment. There are two kinds of penalty for this consequence. Late payment, late filing if you do not do extension. If you do extension, the failure to file penalty will be waived. Failure to pay is the other issue that sometimes if it's the first time it happened, it is possible to get it abated under the first time penalty abatement rules. Our recommendation to our clients is pay the maximum that you can at the time of the extension. Have a very good faith estimate. Then, of course, there are exceptions available at the time of computing. One is first time penalty abatement. The second one is reasonable cause. And the third one is a hardship.
Okay.
That's where an experienced CPA or accountant or an attorney will come into play, how to make the presentation to the Internal Revenue Service.
Okay. Someone asked a question about if he or she has income from bank interest and from rental income from India is considered as a foreign earned income.
I am very sorry I didn't hear some part of the question. Can I please request you to repeat it?
I will repeat that. Question is that someone has income interest from the bank account.
Interest income in India.
Yeah, in India, and has also rental income in India. Will this be considered as foreign earned income?
Sir, with due respect, there is even though it's income from India, in the US, we have certain incomes labeled rental income, rental income, passive income, interest income, investment income under the category of passive income. The meaning of the word earned income is different. Earned income in the US means the money on which you have paid Social Security and Medicare taxes. Having clarified that, the sad part is, yes, in India, if I'm not mistaken, you have 250,000 or 350,000 rupees as an exclusion. The thing that we call in the US as standard deduction. It's not subject to income taxes. However, because they have indicated that they are foreigners, there may be tax deducted at source, TDS. So we pick up the income and report it on the US income tax return. And then we go and say, oh, wait a minute. I want to claim credit for the taxes that I've already paid to India as TDS. Because India and US had a tax treaty signed in 1982. And it says, there shall be no double taxation. The sad part is, over the years, nobody went back to modify it. And when we compute the tax credit, it's not exact dollar for dollar or rupee for dollar. We do lose some, about 30 to 40%, we do not get the credit. Another point to emphasize here, that's only at the federal level. State of Virginia, where we picked up the income, state of Virginia doesn't give us any benefit that we pay taxes in India on it. And it can be for any income, even if it is sale of the property in India, you are paying taxes to India, but to be compliant with the US tax laws, where it shall says, US green card holder, US citizen, green card holder, and a US person must pay their taxes on their worldwide income. So if they inherited a property, they sold the property, they invested the money in some scheme to save taxes in India. Unfortunately, that scheme is not recognized in the US. You will report it in the US. I did it. And you're gonna be liable for the taxes in the US and the state of Virginia, if you are in Virginia or any other state.
Okay.
That's the bad news.
Bad news. Question from audience that someone has purchased a medical insurance from Marketplace, and now he has to pay a big amount of tax, approximately $5,000. That person needs help, your guidance.
This one is a little tricky question because we need to find out what can we do to reduce his income to fall in the category at what level he indicated that this is my income going to be, and he claimed the PTC, premium tax credit. Because the income now is coming up to be higher, and therefore the Marketplace information form 1095A information is making him pay back the tax or the benefit he took, the premium tax credit he took. For the year 2020, that payback was excluded. And when I was preparing for this presentation, I believe I read for the year 2021 also it's excluded, but I saw one return that I did a couple of days ago. I didn't review it yet. It was catching back up about $488. I don't know how, on what grounds. I did not review how to override that thing yet. But there's a chance it is there in the American Rescue Plan that President Biden signed in April or May 2021. There might be an exclusion there.
Okay. So, Manjit ji, what is 457B contribution?
I'm sorry, dobara bole
457B contribution. Well, in one of your slides.
मेरे को देखना पड़ेगा सर.
Okay.
I can get you the answer later, and then you can forward
no
it to the
problem.
gentleman asking. Gentleman
So,
or lady asking. Sorry, I have to be
okay.
neutral gender.
This is another question. What are limitations or conditions for converting IRA to Roth IRA once you are over 60 years?
I hate to do this, but the point when you convert from traditional IRA to Roth IRA, the conversion is subject to income taxes. Please do remember, when you contribute it into into traditional IRA, whether it came in down as a 401k when you change jobs and you put it into a traditional IRA, and now you want to roll it over into a Roth IRA. I hate to say this, you didn't pay taxes at that time. You pay taxes now, whether you are 48 years old or you are 68 years old. It is subject to income tax.
Okay. Question.
So it's a better idea to take the money out slowly and steadily. There's something goes back in the back of my head about some 5-year plan or something that you can convert it into some systematic manner.
Okay. If someone has not received the full incentive impact of $2,800, if it was received only partially, like $2,000, where you can claim $8,000 deduction in income tax.
Respectfully, we need to prepare the return, identify that we received only 2,000 out of the 2,800. That's one part. This is where the strategy to reduce the taxable income needs to come into play. If the income is at the level that we talked about, married filing joint, if the income was below, the screen is on the slide is on the screen right now. If the income was 150,000 or below, that married couple is fully eligible to get the 2,800. Unfortunately, the income level went up, and remember, that's why I talked about AGI and the income. This clearly says it's the word AGI. Therefore, that individual needs to see where can she invest the money when she does that person's 2021 tax return. Does that person have eligibility to put additional money into a high deductible plan because it's going to lower the AGI? Is there something else that that person can do to reduce the AGI? Maybe not a whole lot, just sufficient to get the remaining $800.
Okay. So I have the last question chat box, then we can open up. Someone asks how much of a college tuition can be itemized deduction? How much?
College tuition.
Yeah.
There are two factors that's playing in that are in the play. One is the AGI of the parent. Unfortunately, if the parents do a married filing separate return, the education credit is totally zero.
Okay.
So if the parents' AGI is 180,000 or more, the education credit number goes down.
Okay.
No matter what. Let's put the person's income level at $170,000. The maximum credit, if the individual has not claimed it for 4 years, any of the past 4 years, first year college, second year college, third year college, fourth year college. These are the only 4 years you can claim. The maximum credit is $2,500. So as the income goes up, the $2,500 credit goes down. And that education credit is split two ways. $1,500 reduces the income taxes, and just $1,000 is refundable. In other words, if there is money available, they'll return it to you.
Okay.
Now the other thing is, in the year 2022 is going to be slightly different. 2021, 20. What they did is they got rid of the education deduction, tuition deduction. Remember, we saw the slide? But if it is for higher college level, master's program, it used to be $20,000 as a deduction, and you were allowed to claim $2,000 tax credit. That's gone. Oh, sorry, that's doubled. The amount of money that you can spend to use for getting a lifetime learning credit is doubled.
Okay.
So the question needs, the gentleman, the person who asked the question needs to provide a little more detail. If it is
Okay.
for a bachelor's degree or is it for master's degree?
Manjit ji, this question came back again about somebody has to pay $5,000 tax related to medical insurance, and he says that his income is 71,130 only from W2. Is there any solution you can suggest to this gentleman? That what he
I don't want him to give out too much of his personal information in the public forum.
Yeah.
He's welcome to call our office on Monday, and somebody will run the numbers and see what suggestion we can do. For example, if he's not participating in his 401k plan at work or doesn't have it at $75,000 of income or $71,000 of income, he may have the opportunity to put money into individual retirement account, lower his AGI, and try to get benefit that way.
Okay. So
Well,
somebody has raised the question about your slide 9, retirement plan 401k for 50 plus. He believes that it was 25,500 and your slide shows 65,500 is something not clear.
He's talking about is he talking about 401k, 403b, total contribution 50,000 plus?
Yeah, 401k for 50 plus. What is the maximum?
Check karna padega, sir. Let me put it this way. I'm a human being, could have made a calculator error, but I'm not going to blame the calculator. I'm going to blame it to my memory.
I think, let me check if there is any more question.
Gupta ji, there is one more question. Someone has asked, what are the tax implications when a person converts 401k to rollover IRA?
See, 401k rollover. 401k can also be a Roth 401k and can be a traditional 401k. From a traditional 401k into a Roth IRA, it is just like he has cashed it, subject to full income taxes.
I have one question. If you guys are done, then let me know. I have raised the hand. So go ahead, Jogendra Rai first.
I say that I have no more questions in the chat box. If you have any questions, please, you can go directly request from Manjit ji to present your question. I don't have anything in the chat box.
Let me ask the question. Manjit ji, what's the best way to take out the 401k money, regular 401k money, before or after the retirement? What is the best age and best way to take out the money?
I usually suggest to strategize of taking lesser and lesser money out of your, to take the least amount, try to substantiate, make an effort to have a least amount of income, and then take higher deduction out of the 401k. And if somebody decides to go to India for a nice fun trip, do it after or do it in the period where your income level in the US will be low.
And what is the best age to start taking, 60, 62, or what is the best age?
It is your money. There's no strategy there. The difference
So
is different age brackets is more for claiming the Social Security from the US government. You get higher
Okay.
amount, but getting money out from the IRA, or from a 401k, it all depends on the individual's needs. And unfortunately, it's at the tax bracket that you are at that time.
Okay. Thank you.
Okay,
Manjit, I have a
Manjit.
question.
Any more
I
questions,
think
please? Anybody has any questions?
yes,
I have a
I think
question, Gupta ji.
I think
Yeah, I would like Mr. Singh to elaborate on social security income taxes. How much is allowed tax-free this year?
I have to check on that number, but if I'm not mistaken, you can have income worth up to 24,000, 26,000, and your Social Security, whatever you have, is not subject to tax. Slowly and steadily, as the income increases, the Social Security amounts starts getting subject to income taxes. The maximum Social Security exempt from income tax, no matter what your income level is, 15%.
But that is not for this year, that was last year.
Sir, with due respect, you make $100,000 on a W-2 and you have $10,000 in Social Security. 1,500 is exempt from income tax. The remaining is subject to income taxes.
Okay, thank you.
That's why the Social Security benefits that you get increases based on the COLA rate. And therefore, the government has set a rate, 15% shall not be subject to income taxes.
Okay, thank you.
They have based it on social percentage on this criteria.
Manjit ji, I have a question, a follow-up question, what Krupa ji asked, and I also asked a little earlier. As about converting the money from IRA to, is it better to convert money to Roth IRA because the money at that time will grow tax-free? I understand you answered that question earlier saying you have to pay the taxes when you convert the money from IRA to Roth IRA. But at least I'm now 62, so I would like to convert that into Roth IRA, pay the tax, but at least it will grow from that point onwards tax-free. Is there any limitation on how much can you convert from your IRA to Roth IRA?
Not to my belief, sir. I'll have to check, but if I stress my memory, I don't see there is any restriction.
Okay. And do you think that makes sense really, especially for a 60, 62, rather than taking a minimum distribution from IRA account?
Minimum distribution starts when you reach the age of 70 and a half plus.
Right. So
not before then.
Right,
and to be very honest with you, with the way the world is going around these days, I like to have my money in my hand, even though it is in an IRA account. If I die, my children will get it. My wife will get it. More power to her. I left her money. She can pay the damn tax.
So rather than
I thought you guys will laugh.
Okay. So you're saying rather than converting the money to Roth IRA and pay the tax now and grow tax-free, leave it in IRA.
That's my strategy. Everybody has different strategies and choices.
Okay, thank you.
Different theories. Younger people these days, they are of the opinion, let's put the money into Roth IRA. Or 401k Roth. My story is a bird in hand is better than two in the bush. I don't know किसने देखा time कब पैसा निकालेगा.
But either way, the money is in your hand, whether it's in Roth IRA or IRA, the money is in your hand, right?
I agree with you. But
so
I saved the money on not paying taxes to the US government today.
That's right.
अगर $10,000 के ऊपर भी I'm in 22% bracket, 2,200 is still mine. And instead of Biden getting it or Trump getting it and Trump building the wall south of Mexico, north of Mexico, and Biden, who knows where he's going to spend it? Maybe Poland with the troops in there.
So isn't it similar? Like if you have, for example, $1 million, you pay the tax for 300,000. So still you are having 700,000 in your hand, and once you start getting the interest, you are getting the interest. You are getting the interest on that, or whatever money you are making. You are not going to pay tax on that, or is it not going to behave same way? Even you are having 100,000, still you are making
I am
money?
sorry, sir. I am the point. The information that I'm getting from you, little broken down. I would like you to consider this. You converted $700,000, 1 million, and you got $700,000. What's the interest rate you're gonna get tax-free?
Okay.
Versus the 35 or 37% income tax you pay to the government, plus Virginia or any other state, 5.75%. तराजू है सर, आप उसको देखो कौन सा फायदा होता है. Yes, somebody came to the office about 3 days ago and he says, I sent the money to India because I'm getting a higher return of interest in India. You can do that, no problem.
डॉलर की वैल्यू बढ़ जाएगी तब तक.
Dollar की value.
Okay, anyway, I have a question, Manjit bhai.
Thank you.
There's a two thing: gift tax exclusion and there's a kiddie tax exemption. Can we do on our grandchildren or have to?
Yes, sir.
I can pay $16,000 to each grandchildren.
Yes, sir.
Gift, and they don't have to pay any tax.
When you give out gift to anybody, nobody has to pay tax. I'm also available.
No, can I give to other people also, to you also?
Absolutely.
Me also.
I
will appreciate it.
I will take some. Sunil bhai. I will take some.
Rajiv, you have to stand in the line.
Yes. And
hold on. Can you answer my
Me
question?
too, me
Can I
too.
give 16,000 each grandchildren and to my sons also?
Yes, sir.
And I don't have to pay tax.
That is correct, sir.
Sunil bhai, I'm also in line.
When you distribute your estate, what you are technically doing is distributing your wealth.
Yeah.
Right? वो जो बड़ा $11 million का चिप है ना, जिसमें इनकम टैक्स नहीं लगेगा आपके जाने के बाद, आप उसको छोटा कर रहे हैं.
सुनील साहब,
उसके लिए एक फॉर्म भर के देना पड़ेगा गवर्नमेंट को कि मैं जो गिफ्ट मैंने दिया, मैंने आज दिया, उस वक्त देने के बजाय.
सुनील जी,
I got it.
सुनील साहब, जय माता जी. उसको don't forget, he's saying this is his suggestion. You are, if you have a 12 million or over, that was his suggestion.
Okay.
Sunil ji, adopt me.
If anybody else has a question, otherwise I will request Rajiv ji to conclude.
Gopi ji has question. Gopi ji.
Okay, Gopi ji, go ahead.
Yeah, regarding the college tuition, it is bachelor education. So if I give 50,000 for first year tuition, only I can deduct 2,500.
No, respectfully, sir, you have to be careful. What is the adjusted gross income that you have? If the adjusted gross income exceeds 180,000 plus, you get zero deduction, because in 2021, the tuition deduction is zero. Please note, it's education tax credit for bachelor's degree, maximum $2,500. The difference is the deduction is going to reduce your adjusted gross income. The tax credit is a dollar for dollar reduction of your income tax. That's a better one. but आपको अपना income manipulate करना पड़ेगा कि उस category में आ जाए जिसमें credit acceptable है.
Manjit bhai, he will not understand your Hindi. So
I'm so sorry, sir. Go back. Mr. Gopinath ji, you can contact me directly. I'll try to explain it again.
Okay, thank you.
Welcome.
If anybody has a question now, then I will request Rajiv ji to conclude this. And thank you note by who? Rajiv ji.
So thank you. Before moving ahead, I
Hey,
request.
Raju, also, sorry.
Please go ahead.
Go ahead.
Okay, so I was just confirming from the participants if anyone has any questions. If there are no questions, then we'll move ahead towards the closure of this event.
Hi, I have a question about gift tax. Could you quickly revisit? I missed that part of the presentation if there was any, because I joined late.
Can I ask a quick question to the participants? Are you still able to see my screen? The share screen still working or not?
Yes.
Yeah, it's working.
All right, because I went to Google to search something and I don't know where I am on my screen.
You are still there.
Yeah. Ma'am, can you repeat your question now that I have the screen back?
Yeah, I missed the part about gift tax. So if you could please briefly give an idea as to how it works, gift tax, giving to children or other family members.
All right, the gift tax is something if you don't want to do any paperwork. For the year 2022, you can give away out of your bank account or from India, $16,000 to your children, to your grandchildren, to anybody that you feel like to. That includes everybody. $16,000. One child or two child or three children or four children. No issues. If you give it out greater than 16,000, let's say 50,000, 50, there's a form that you have to fill and indicate on that form that when I die and my estate is greater than 12.06 millions, each individual, husband and wife, that means double it. If there's a spouse, 12, I am giving my gift, 50,000 minus 16, that's $34,000. Mr. IRS, please record that I'm giving the extra money out of this 12.06 today. That means for the future, you'll be left with less than 12.06. And therefore, there is no tax, estate tax to you, gift tax to you, and no tax to the recipient.
Okay, thank you.
Does that explain it?
Thank you very much. Yes.
Welcome.
Rajiv.
Yes, sir. Thank you. Thank you, Mr. Singh.
Invite the Nitin
Nice of you.
Yadav.
Thank you, Mr. Singh. It was really nice of you to provide such a detailed, stunning, and accurate presentation, touching every aspect of the tax reform. I believe everyone should be massively benefited by the detailed presentation that we gave. We'll move ahead towards the closure of this event, and I would request one of the community leaders, Mr. Nitin, to convey the vote of thanks to everyone.
भाई अपना फोन म्यूट कीजिए अपना।
Hello, thanks everyone. Thanks Rajiv ji. Thank you so much, Mr. Manjit ji, for all this valuable information regarding the tax filing. We discussed the new rules, which includes the tax brackets, standard deduction, recovery rebate, capital gains, and charitable contribution. Thank you so much on that. And it has been a privilege to be part of this event along with all the other people present here. It has been an overall an excellent and very successful event, and I'm really obliged witnessing it. My special thanks to the program coordinators, Mrs. Sashi Agarwal ji, Shri Rajiv Kamal ji, and my sincere thanks to the program organizer, Shri Sunil Singh ji, Dr. Shambhu Banik ji, Dr. Yogendra Gupta ji, President Nana ji, past President Shri Kripa Shankar ji. Thank you again, and bahut dhanyawad to be part of this event. Thank you so much.
Thank you.
Before you guys leave, I have an announcement. At 3:30 from Bullrun Park, we are doing a car rally to support Yogi ji in UP. If anyone want to join, please join at 3:30 at Bullrun Park or before. You have to be there before 3:30, not after. Thank you very much.